Good day, fellow investors. Let's discuss a little bit about shipping, investing in shipping stocks, and look a little bit at Danaos Corporation. If you look at the stock price, it's a little bit down now, but the dividend yield is beautiful there, 4%. The P ratio crazy low, 2%. They're also investing in growth. The market cap 1.5 billion. It's a container ship, and let's look a little bit at the story there. Let's start with the stock price story. If you look at this, it has its cycles up and down, nothing wrong, right? Well, if I go to 5 years before the pandemic shipping boom, it was at $7, which is a tenth of what it was now. So it really enjoyed a boom. But let me show you another slide for further depth of this story. This is 2007 and the stock is still at 15% of where it was in 2007. So that's also showing another side of the shipping investing story that we are discussing here. When it comes to Danaos, why to invest? Largest independent owners of modern container ships, they get long-term charters for their ships, so free cash flow, limited market risks with these long-term contracts. Everything looks good if you look at the financials now. Huge cash flows compared to the market capitalization. All looks good. They are also buying now a little bit of dry bulk vessels. So expanding, diversifying, you would say. Nothing wrong. Long-term coverage of the ships there. Many millions already contracted, so that's some certainty into the cash flows. But let me show you another chart. This is the history, and this will explain how you have to invest in shipping. So you have your company, your ships, you do your business, and then suddenly there is the first shipping boom. China entered the World Trade Organization, boom, prices of container ships exploded, exports, and then what do? You raise money at the New York Stock Exchange, everyone is going around, you're filled with cash flows and this and that, you sell a little bit of stock at high prices, so you sell here at 300, you issue capital, buy a few boats, make everything look nicer, and everything will be great forever. Then what happens? Well, this happens. The financial crisis comes, everyone went public, everyone invested in ships. When everyone does that, a crash comes. And what do you do as a ship owner? Well, you make a new equity raise. So you issued shares here at 200 million at the price of 300, and then you make a silent equity raise where you, as a ship owner, you took the money away in 2007, and then you buy back as much as you can. In 2009, you already got paid, and then you buy back the whole company at 1/6 of what you got here. That's how I want to invest in shipping. This is where the wealth is made. Then life goes on, you make some money, dividends, this and that, then there is another downturn, refinance, public offering, you again buy back the ships here at a lower price, and then again we have another fortunate boom, which happens every here and there, and that is when shippers make extreme amounts of money. But that is also the shipping cycle. We could say that this company was bankrupt once, twice over the last 15 years, and that is the risk that is called investing in shipping. And if we look at what is going on now, everything looks great, but that is again the pandemic boom, and then everything started to normalize, and then the Houthis attacked here, closed the Red Sea, and then prices went up again, which is a benefit for all the shippers, but now they say they will not attack, everything okay, and prices will likely stabilize, perhaps even at lower levels, because there is a lot of investment. And the company here, also Danaos, has still debt around. They are still issuing loans, syndicated loans facilities to finance 8 new building container ships. But all of those things, they keep just on doing business like they used to do. But if there is again a downturn like this, all these contracts will be renewed at lower prices, and then they will not be making any money on those contracts. And if we look at the market, 20% industry order book to fleet ratio, 27%, which means huge supplies, deliveries will be coming, which means will go to lower prices. The same as happened in 2007. And that is then the story of shipping, investing in shipping, and I would leave it to Greek, Danish ship owners. If you can't buy back the equity at 1/6 of the price you sold it for in good times, you are not a shipping investor, you are a small retail sheep to be sheared. Further, high prices lead to low prices lead to high prices. That is the cycle with cyclicals. High shipping prices, everyone investing in boats, usually leads to low prices. Now it looks great, but simply not value investing. I cannot know where will this be in 2027. Will there be equity raises or more dividends? And the story, if you look at the quarterly discussions, everything great. Contracted backlog going up 3.3 billion, nothing wrong, excellent earnings visibility, and everything is correct there. But there is always this uncertainty that when things turn into the shipping industry, those turn very, very fast. And they are also, like everyone else, growing, because if you're not doing and the others are doing it, then you are looking the stupid one. But growing into an oversupplied market is the wrong thing to do, but these ship owners keep on doing. Why? Because they know all things go to hell. 1.6, 1.7, 1/10 of the current prices they are getting for their shares now will be able to buy back the ships. That's shipping.